The streaming space is heating up as Netflix announced its much anticipated pricing model for its ad tier offering. Yahoo Finance's Allie Canal joins us now. Allie, how are the analysts reacting to this?
They're reacting pretty positively. We saw the stock move higher at the close. It closed above 5%. Now it's trading relatively flat. But for a little bit of an analyst roundup here, we have Citigroup buy rating, Wedbush outperform rating. UBS raised its price target by $52 to $250 a share, citing that the ad tier could provide a 10% boost in total revenue. We had JP Morgan saying that the details that we were provided yesterday did offer a bit more clarity. They think that the $6.99 price point is competitive, should drive higher adoption. But I will say that across the majority of notes that I've read, there is this level of concern, especially when we talk about macroeconomic headwinds, foreign exchange pressures. There seems to be a little less bearish sentiment when it comes to the overall landscape of advertising, which I think is a positive moving forward. And Netflix, they said they are nearly sold out of all of its ad inventory for the launch. So if that's any indication of the health of the market, maybe things are starting to improve there.
Allie, and what do you think this means for Netflix, its higher-end businesses? Does this just take subscribers from that service, put them onto a cheaper option, and maybe Netflix doesn't make a lot of money from this?
And that's been a big concern on the street as well, right? How is this going to impact revenue if consumers are trading down? I was on a call prior to the announcement yesterday, and Netflix, they seem to shrug off those concerns. They told the reporters and analysts that were on the call that total revenue will be neutral to positive with the comparable plan. Now, that $6.99 target, it's not too high, it's not too low. I will say that Disney's ad-supported version, that is going to cost $7.99. Netflix was also asked if that had anything to do with the price point, but they said no, it is strictly due to entertainment value. But a couple cons for the advertising, which I thought was interesting. There are certain shows and movies that you're not going to be able to watch through ads due to licensing agreements. So Netflix said about 5 to 10% of overall programming, depending on the country. You also won't be able to download anything, which to me is a big deal because I download so many Netflix shows before flights. If you have kids, I think that's important. So I don't know. We're going to have to see.
That's interesting. I don't often download. But what's also interesting to me is it's sort of been taken as for granted by many of the analysts that Netflix is going to win the advertising dollars. In other words, you know, advertisers are cutting back on spending, right? Mm-hmm. But it seems like the sort of base case is that Netflix will definitely get a decent share of those dollars because of its positioning, its brand value, et cetera.
Yeah, and analysts that I've talked to said, you know, advertisers, they really go to where the consumer is. If consumers are on streaming, they're going to try it for as long as they can. Another thing is that some of these ad shows, they're going to be available on Nielsen. So we're going to have Nielsen ratings now. And that's going to provide a bit more clarity to advertisers when it comes to how these shows are doing, how the ads could potentially perform. So that's sort of bridging the gap, I guess, between broadcast and streaming that we're seeing more and more of.
Yeah, we won't just hear how many minutes were streamed.
I'm over that. We need actual ratings.
Yeah, I'm looking forward to that.
Yes.
Good point. Allie Canal, thanks so much.